A lot of businesses these days will probably run off one of these softwares, assuming you're using software and not Excel or something similar. And what we've seen a lot as a business is people come to us saying, "Oh yeah, I've got a given Xero, I've been given FreeAgent, but that's it. That's the start and end of what their accountant thinks their job is." But like I say, a lot of our input is on financial education and sort of training clients up. So although you might have one of these softwares, it's a good starting point. But what we talk about is fully utilising them. Some of them are certainly getting more and more expensive. All of them are getting more and more expensive, generally speaking. So you need to make sure you get some return on that spend on money. So as a business, we've grown over the last 6 years off the back of Xero, really. We're an accountancy firm that was sort of born in the cloud, so similar to Xero. So we were quite lucky from that perspective. We're very much paperless. We have very few things can limit the direction we go with the business. So if, for example, one of these other softwares was to really invest heavily in become the market leader, which Xero currently holds, then we're nimble enough to change and sort of advise the clients to change. We don't go in telling any client they've got to be on a specific software. We just support them on what works well for their business. But I say our sort of go-to software is Xero. We're platinum partners. FreeAgent is becoming a really popular choice, and that's, like I said, I think Xero's gone up from about £22 a month when we started 6 years ago to 50-ish. So like they've over doubled their pricing, and they've set a pretty heavy precedent that they're going to continue doing that again. Not the doubling, but certainly significant price increases each year. So FreeAgent is a great option because that if you're a NatWest customer or you have a Metal bank account, which is I'd say it's NatWest sort of techie startup bank basically, or RBS, then you can get FreeAgent for free. So again, if you're not on a software at the minute and you're considering it, go to Metal or NatWest, get a bank account, and then you can tap into that for free. Sage was sort of the previous market leader, and again, we still have lots of clients who use it. We prefer it when they're on the cloud version, so because the real benefit that Xero brought in was the ability for the accountant and the client to be working on looking at the same thing remotely. And then you've got Quickbooks, who are largely dominating the American market. But obviously, like I say, there's definitely a few users over here. So, like I say, there's the majority of businesses spread across those, all very good softwares. But like I say, for us, it's okay. You've got these softwares. Are you fully utilising them? So, one of the main benefits of the banking softwares these days is sort of the automation of the bank feeds. So I say, yes, you're using any of those softwares, but have you got the bank feed set up? I think we were speaking to Xero the other day, and I think only 40% of businesses are actually using the bank feed functionality. I'd say all of our clients are using it. So it's quite a shocking stat, really, that people are paying for these accounting softwares, but still wanting to either import a bank or type it in some way. So slightly worrying. And then, like I say, you go into sort of like the bankroll side of things. So yes, you've got some transactions that you'll never get an invoice for. So a common example is bank charges. So whoever you bank with, you will have Lloyd's bank fee of X. You're never going to get a receipt to that to match it to. But what you should be doing is going into the software and saying, okay, whenever you see a Lloyd's -- charge -- can you tell it to mark it to charges? And like you can do the same with things like interest. You can do the same with like HP and loan repayments and stuff like this. So because you've got to think, you want to go on your accounting software and either have an invoice to match to it, so you'll put that through the accounting software in the first place, or you want to have a rule in place which says, I know I'm never going to get an invoice to match to that, but what I'm going to do is set up a rule to say every time that comes up, I'm just going to be able to click OK. A real common one is if you've got things like Stripe integrations and stuff like that, because Stripe can fire thousands of transactions in monthly or daily, depending on the type of business you've got. And so if you instead of having to code that to a certain place, if you just say every single Stripe transaction is going to be put to a specific place, then, like you say, you'll be able to build it out from there. Obviously for Stripe and stuff like that, there are integration other softwares that link to Xero, which will help you manage that. So things like e-commerce softwares that will make those individual transactions easier to manage and build out a profit and loss account, basically. Any questions on that? Like I say, if there is any questions, I'll just pause at the end of each slide and just shout out. So lock dates is really key. One of the benefits of Sage it still is that you can lock down a period. So an accountant are really keen on this, because if you think we will if a company makes accounts to March and you send us a backup, which is what essentially used to happen from the Sage side of things, that would only have information up to when you sent us that. So it might be 3 months after the year and you send us a backup, but then all of a sudden you get 5, 10, 15 invoices that related to before March and you put it on your system. The accountants are never going to see that. And so that's why this lockdown process is so key. And especially it's probably more prevalent these days because, like I say, we don't have this whole backup side of things, but you can have like Xero and Quickbooks, FreeAgent, they'll all have lock dates in there essentially. So where you can, you'll say, if anyone tries to post in a transaction before this date, just say no. The problem is those users can generally then quickly go back, edit the settings and change it. So, but like I say, so it's accountant's worst nightmare, but going back and changing stuff because the numbers they're working on will then change. But it does become important for business owners as well. So if you're reporting on, say, monthly profitability of your business, and that's whether that's internally to yourself as ownership of how you're tracking versus budget, or whether it's to other shareholders or to banks. If you're, and obviously the sort of the latter, the more external they are and the more pressure they're likely to put on you. But if you tell a bank that you've made 500 grand profit in one quarter or month, and then the next month you spotted partway through doing the next month, actually 100 grand of that related to this month, so I'm going to change it and bring it forward. From what you're telling the bank, you made 500 grand last month and you might have made 500 grand this month, but realistically you've borrowed that 100 grand from the previous month. And if they were to look back at the previous months, then they're going to see big changes. And then it just they're going to start questioning the integrity of your accounting function and how you operate, because I think we certainly see it from our side. Like if we sort of identify a problem that's happened once, you then start looking for other bits and stuff like that and say, okay, is this sort of common from this business's perspective? So like I say, certainly at year end it's very key, but like I say, as businesses scale and they have external shareholders and stakeholders who they're responsible to reporting to, locking down the periods is really key. So then, like I say, the modern accounting softwares are creating more and more functionality. So things like recurring invoices and bills. I could talk about our accounting function and how we work. So how we quote our clients, we have sort of like a menu-based system. So our clients will pick from a menu of the services they want to sign up for, and we bill monthly. So if it's a year-end fee, for example, we will bill 1/12 of that year-end fee throughout the year. And so we'll have things like year-end fees, tax planning meetings, quarterly catch-ups, VAT returns, and that's all broken down on our invoice. So we'll quote it. If the client was to sign up, it will then kick an invoice into Xero, which is the accounting software we use. And so we would just set that to repeat each month. So we go in and say, okay, that invoice needs to repeat once a month, go out on the 21st of the month, payable by the 7th of next month. And so we've gone from quoting a client to that automatically feeding through into our Xero. And then as part of because our invoicing is repeating monthly invoicing, we also use Go Cardless. So Go Cardless is a system where the client essentially signs up, and whatever we bill them, whatever bill we raise, so it can vary month on month. So that tends to be things like payroll, or if we're doing the bookkeeping for the client, the transaction levels. But whatever we bill them, it will collect on that date. It tells them, it's not like we're taking it off them as such, but you can sort of see from our accounting system that from our client just signing up to us by a sort of couple of clicks of the button, as long as they sign up to that Go Cardless link, our invoicing is automated, so we don't have to spend any time in our month doing that, and our debt collection is also automated. So again, we openly talk about that because we think every business should be trying to input similar things. Cash flow is what tends to kill smaller businesses. So yes, it's all right doing the work and billing for it, but the problems tend to come when you work with big businesses who try and dictate the payment cycles and stuff like that. So if you can set out pretty strong billing procedures from the start, then like I say, you're in control of that. And we do go into one of the slides at the end. So this is sort of like the section on, you've got an accounting software, what should you be doing within that? We've got a couple of slides at the end that we talk about sort of add-ons and stuff like that to like improve that app stack. And then, so yeah, that's setting them up. Like I say, we're fortunate to have recurring revenue model. So we don't really have automated chasers. We do have some clients who refuse the Go Cardless link, and then at that point we have a decision as a business whether we even engage with them, because we're probably now at a point where we say, look, we know the kind of businesses that we want to work with, and if you can't sign up to that, then maybe we're not a good fit. But like I say, there is some clients who just have very rigid processes where we don't force Go Cardless on them. So like automated chases is something that the account softwares have these days. So you can say, if this transaction, so you raise an invoice on the 30th of the month, you can say, and it's due the end of the following month, you can say 7 days before the month end, can you give them a gentle nudge? So you'll design an email with, so it'll say, I just reminded that in 7 days, X invoice is payable, and you obviously can have, can't think of the word for it, but some like a holding place where it automatically fills in the invoice number. This is the amount, please can you make payment? And then like you say, you can set it then to go day before, day of, and then by 7 days after, 14 days after, and a month after, you might be a bit more aggressive with your messaging, but it's all possible within these softwares. And then the last one, probably not the clearest looking at it. So what you can do in this software now is group them. So like if you have a debt book, so age debtors of people who owe you money, you can say, well, these ones are on direct debit, so I know I don't need to chase those. So you have a direct debit group. And these ones are the ones who aren't on direct debit, or you could have them as like almost like historical problem payers and stuff like that. And it just allows you to segregate your list of contacts and target them in different ways. So that can be quite useful from the software perspective. The sort of real benefits of the Xeros and stuff like that are like, so the bank's fed into there. So we've got all the bank's ins and outs. We've got the sales should be raised out of the softwares. No one should be raised. If you're paying for a software, you should be raising your invoices in that software. So we've got the sales, we've got the bank. The next is getting information with regards to purchases. So we work with an app called Dext. Xero, as an example, has a free add-on called HubDoc. So if you've got Xero, you get access to HubDoc for free. And HubDoc, there's 3 main ways you typically get invoices. One is by email, one is by a physical piece of paper, like coffee shops and stuff. And then some of them are obviously embedded in like the Amazon and things like that. So how Dex works is you get an emailing address. So every client will be like name.business@dex.cc. And so how we work with clients is we either tell them every email that they get to forward it onto that box, and then it reads the invoice. Then the other option is you go to your suppliers and say, look, all of our invoices need to get fed through this Dext email address. That's the second option. Then with regards to the coffee shop receipts invoices, it comes with an app, so you just take a photo of it. And so the real benefit of HubDoc and Dext is that does the hard work for you. So the first time you buy a Costa, you'll say, okay, this Costa, you'll pick out the line item if you really want that in your system. So like lotto, whatever, £4 or £5 of that, £1 VAT, total cost £6. And then so the first time you'll say, okay, I want that coded into subsistence every time, or I want that to be coded to staff drinks every time. Then every time one of those receipts comes through, you can tell Dex, well, I'm never going to buy anything different from Costa. So what I want you to do is just push that straight through into Xero. So you'll take a photo, you'll go into the coffee shop, take a photo of it, and we're doing the accounts. The banks come into Xero to say spent £6 at Costa, and it'll, then the Xero is clever enough to say, okay, I'm looking for Costa on what the date today is, 18th of something, November maybe? 19th of November, around this time, and you've got a receipt that's around that time, and then you'll match them up. So we run finance functions for pubs in Nottingham, companies down in London, because we've got all the main information, we've got the sales, we've got the bank, and then all we say to them is, we are going to ask you for everything that goes through the bank, so just send us the receipts. The bigger problem comes if people buy things personally and want that to go through the company, because then it's their responsibility to say, look, I've actually bought this petrol through, or I haven't got my mileage, can you claim my mileage? And that's when the expense side of it comes in, like expense forms and stuff. So but yeah, I've got a slide on that, and I've got about 8 minutes. So but yeah, so that's how we're able to operate finance functions remotely. And like I say, it's just changing. The last option is we can set up accounts at our clients' offices as well. So, and then like I say, as long as all their like finance related costs go to there, then we can run it all. So yeah, it's worked. Like I say, as an accountancy practice, we're very flexible. We work with a lot of scale-up, great, significant businesses, and we can say to them, how much of your time are you spending trying to use an accounting software, versus how much more you could generate by passing it on to us. It would be compliant. You can generate more than it'll cost you in revenue in focusing your time on the business. So we do quite well out of having this outsourced finance function is where it sort of fills into our work. Another thing that's really useful in the accounting softwares is tracking categories. So it's called slightly different things in each software, but tracking categories, departments is what Xero calls it. And it all goes back to, like, if you put bad data into a software, you're only going to be able to get bad data out. So us as my accountancy practice down at Neepsend, an example of this is we have 5, we call them squads. So like, if you were to join as a client of ours, you would fall into one of these squads, and they can be based on sort of the type of business you have, the type of work you need. So certain squads might have more capacity for bookkeeping work. Some will have if the bigger, larger businesses will be more suited to someone like a member of our firm who's got like big firm experience. So for us, we can then, so all the sales will go out of Gravitate Accounting, but we can say, okay, of that £100,000 that we turn over, £20,000 was squad 1, £25,000 squad 2, £21,000 squad 3. And so we can really break down that data, and then we can look at how profitable each of those squads are, and it helps us with planning like capacity and things like that. So if you look at it from your business perspective, it's things like, do you have different product lines where you'd like to really, like, because you can set up nominal codes which goes down, but this is sort of cutting the data up and down as well, is sort of how we try and talk about it. So do you have regions, or do you have product lines, or different shops, or different like service offerings, where it'd be nice to see that cut down a different way. And again, it's sort of, the more you can put in, so you can have up to 2 tracking categories in Xero. Not 100% sure how the others work, but like you say, you can quickly get those set up. You can even go into the software and say, okay, I know that all these transactions from this one supplier, or from certain sort of select certain of certain amounts, they want to be tracked to a certain category, and you can quickly go back and backdate that all as well. Finding recode is a really good function for that. But like I say, it all comes back to that. The better the data you put into the software, the better you can take out. Oh, I thought you had a question. 5 minutes. Any more questions on that one? Yeah, cost centers, departments. Yeah. So yeah, it's really useful for that. Then, like I say, all the softwares do allow customized like profit and loss as well. So I think one of the, I don't know why they haven't changed it, but if you go onto Xero for the first time, it is set up where, for example, corporation tax is set as a cost and dividends might not even have its own nominal really. So having a good chart of accounts is really key. And I would certainly have, like if you're building a scale up where EBITDA is important, building out so you can go to a custom report, quickly go, I want to see my business based on EBITDA, or I want to see it based on a standard P&L. You can sort of flick between those and just to see how it's performing. But yeah, I think that's generally really useful to see. And again, it just goes back to there is a lot of functionality in these softwares. I think we go into, and then yeah, budgets is another key one. So with regards to budgets, especially newer businesses where you're not really holding, you haven't got anyone who you're accountable to. If you can agree a rough budget at the start of the year, that can go directly into, I know I talk about Xero a lot, but QuickBooks, FreeAgent, Sage all have it. And that you say you've got that accountability piece, and it might be that you set yourself a job of reviewing that budget each quarter just to say, look, what did we miss out on? Did we overspend? Can we change what we're spending money on? Did we miss sales targets? And again, like, can we do something different in this next quarter to hit those targets? But yeah, I think again, it goes back to that financial well-being and that financial education. Like budgets are really useful things to have in place. And then with regards to the apps, I'll just fly through them. So like I say, this section is, like I say, what you've got one of these key accounting softwares in place. They're not really built to be the whole product. They're sort of built with open APIs, so softwares can link with them. So we sort of talked through this one. So Dex, like I say, we use Dex because I'd say it's like 99% reliable. So when it reads an invoice, it's probably 99 point something reliable. It's really good. We find HubDoc less reliable. So although it's free, the risk for us as a business processing thousands of clients' invoices, we'd rather pay a little bit and get the reliable solution as opposed to HubDoc. But again, if HubDoc got to the point where it was a similar level of reliability to Dex, then we could easily switch our clients over. Currently, they contribute to the cost of that, so we could cut that down a little bit to save them the money. Again, these are sort of, Pleo is a staff expense account. So if you're responsible for doing the accounting of your company, or you know someone who absolutely hates it because staff will give you an Excel and sometimes the Excel adds up, sometimes it doesn't, sometimes they attach receipts, sometimes they don't. Our solution to this, well, the common solution is called Pleo. So Pleo is like a top-up card. So whenever someone joins Gravitate, we give them a Pleo account, so they'll top up that account. We can set limits, we can freeze it if we can see them spending loads of money at a bar and we're like, we agree with that. So there's loads of things you can do because it's all used remotely. But like I say, and what happens is I'll go into, Luke's just used it, we paid for parking down there. He's double tapped on his thing to pay for Apple Pay, and then it's saying, okay, can you give me a receipt for this? It's printed off the receipt. A notification comes down saying, have you got the receipt? You take a photo and it's done. So you're basically pushing a bit of the bookkeeping responsibility onto the client, onto your staff. So yeah. Cash collection is what I talked about earlier. So Go Cardless is great for recurring revenue models. Then you've got obviously Stripe's a really common integration. And again, Stripe should be set up on your bank like a bank feed. So you would have, if you're banking with Lloyds, keep saying it, it's in the room, you have Lloyds as your bank, but you also get paid through Stripe. You should have Stripe as a bank feed because you want to see the gross money come in through Stripe. And then, if you have a Stripe bank feed, if it's £10, you might have a 3p fee, £10 3p fee, £10 3p fee, and then that 27 odd quid or 29 quid is then transferred into your Lloyds account on the daily drop. But from an accounting perspective, you need to see that full amount, less the fee. Some people do just think, oh, I know that's the Stripe amount, less a fee, so I'm going to skip a step, but there is risk there. iWalker is a really good one. iWalker allows you to basically act like Klarna, so you can say to your clients, you owe us £5,000, but you can't pay for it all now. They would sign an agreement with iWalker. iWalker would pay you the £5,000, and they would pay iWalker the 3 instalments plus a little bit of interest. So again, in certain cases it can be really useful. I'll be very quick for the last few. Again, so if you've got an intercompany, so like say we have Gravitate Group, Gravitate Tax, Gravitate Accounting, Gravitate Corporate Finance, something like Mayday is a really good app to sit above that. And so we can say at Gravitate, okay, every time we get a rent invoice, we're going to say, well, there's 2 staff in Gravitate Tax, 2 in Corporate Finance, and 25 in Accounting. So we want that rent to be split based on that calculation. And so every month you update the basis of the calculation. So headcount, revenue, square footage that you use, and it helps distribute that. Again, that's a very short overview of that one. And then another one that we really use quite a lot is Teleroo. So now you can, Teleroo is really good because at the minute, if you're, again, responsible for making payments from your accounting software, you might run an age payables detailed report on it, and then say, okay, we're going to pay that one to that client, that one to that client, that one to that client, open up your banking app, and then select all the people you're going to pay, type in the amount you're going to pay, cross-check it maybe, and then make the payment. Teleroo is very much, well, all those invoices are in Xero, so you're going to go through all those invoices you want to pay by ticking them all off, and then you raise a payment and it just goes direct from within the accounting software. So again, if you're responsible for payment runs, you'll probably feel that pain a little bit more, and there's less risk. I mean, for us as a business, we do payment runs for clients. We don't want to be going into their personal bank accounts. We don't want our staff to be going into their company bank accounts, but by operating via Teleroo, you have that comfort that A, there's an approval step, so you can have internal approvers, and B, you know that there's going to be no risk of that being, when the information is transferred over, typed in wrong. So again, another good app. Yeah, you can put payroll into it. So sorry, sped up a little bit there at the end. We're happy to share this presentation if anyone wants it. There's nothing too private on there. So and yeah, I think I can certainly hang around for 10-15 minutes if anyone's got any questions.